Hey everyone, hope you're all having a nice day. Today, I want to go over the power of seasonality and how I implement it in my swing trading strategies, particularly for options trading. So, if you don't know what seasonality is, for the stock market at least, or for stocks, seasonality just looks at a stock and its overall performance per month. Now, in my studies and my research and how I trade, I like to look at stocks that have long-term proof of seasonality. So I use this site, stockcharts.com. It's completely free. You don't even have to have an account to log in. I'm not sponsored or anything like that. You come into this website, and there's other websites you can use too, but this is what I use. And you look at a certain stock that you're interested in. I highly suggest looking at a stock that is in the top ranking in terms of market cap. I try to stay away from the smaller cap stocks because they tend to have less consistency. Um, Regardless, I'm looking at Nvidia for an example, and I'm in this trade right now for the month of May, and you could see each month for Nvidia and how it performs. So for May, we have a 75% win rate over the past 20 years. I'm excluding 2024 because we're in that month currently. Um, and in the month of May, over the past 20 years for Nvidia stock, it has gone up 75% of the time. And not only that, it goes up 7.3%. Same thing with August. 80% of the time it goes up, and it goes up at an average rate percentage return of 7.2%. And for November as well, 80%, 8% or 80% win rate and an 8% return average. So, why is seasonality so important and why you should implement it into your strategies? Whether you're a day trader, scalper, I do swing trading. I only advocate for swing trading. Um, and I did a little bit of research, some light research, and this is pretty much a good explanation here. It is important to consider the effects of seasonality when analyzing stocks from a fundamental point of view because it can have a big impact on an investor's profits and portfolio. This is the interesting part. A business that experiences higher sales during certain seasons may appear to make significant gains during peak seasons and significant losses during off peak seasons. It is not taken into consideration, an investor may choose to buy or sell securities based on activity at hand without accounting for seasonal change that subsequently occurs as part of a company's seasonal business cycle. So, in other words, a seasonality really shows, at least with what I do for the stock market, it shows where the money's flowing in and out of the markets and the business itself, right? So a stock price is heavily influenced by the company's performance. For example, Nvidia has been going up a lot in recent months, almost years now. And why is that? Well, if you look at their earnings, they're experiencing very great revenue increases and net income and profits, which translates into their stock price. But this has been going on for almost 2 decades now. And you have to understand that consumer behavior and where money flows by the consumer and businesses too, business to business transactions, has a huge influence on a stock price. And in my opinion, the technicals, the volume spikes, the levels, and any moving averages or MACDs or any other oscillator you can find, those are just an after statement of what's happening. With seasonality, you're able to pinpoint where the trends start. You're able to pinpoint the patterns year over year. And then you could take and build a trade from just based off of that information. Now, back testing is important. You want to back test your trades. I use Thinkorswim on demand. Okay, you're able to set the date ranges. This is using all historical data from, I think, about the past 10 to 15 years. Depends on certain stocks you look at, but I've had great success so far using this backtesting program or software, and I highly suggest using it. But the technicals and the levels, all that stuff comes afterwards. You really want to look for where is the seasonality, where's the consumer behavior coming into play. And a lot of this, you know, I kind of have my own theory. I wouldn't even say it's theory. I'm sure it's been proven before. I mean, it is used by businesses, but businesses know, for example, NVIDIA, but I can use a more simple example like an ice cream shop or a ski shop. A company, a business that sees profits increase and decrease during certain times of the year, right? So if I'm a ice cream shop owner and I want to make money going into the summer months, I need to buy the materials and ingredients to make ice cream. And the best way to get a lower price is to buy the materials and goods to produce ice cream during the summer months, is to buy it when it's cheaper in the off season. And once the warmer months come in and demand increases, prices naturally go up. They should go up. They don't always go up. Seasonality is not the end all be all, but prices go up once the warmer months come in. There's more demand for ice cream, and you're able to sell your product for a profit. So basically, with seasonality, you're looking for a spread, and that spread is dictated by supply and demand, and that supply and demand is dictated by consumer behavior. Now, there's other factors. You can have economic factors, unemployment, GDP, inflation. All that stuff comes into play as well. Everything comes into play. And that's why you could see deviations in performance. So, yeah, for NVIDIA, for example, May it goes up 75% of the time, but there's that 25% chance it doesn't go up. And that can be for a magnitude of reasons: news events, economic data, company related data or information. So there's always that unknown still. There's always an unknown in the markets. And that's why when you make a profit in the markets, you're embracing the unknown in hopes of making a profit. That risk to reward. So basically, that's what I do for all my trades. And I like to use it for swing trading. And seasonality has really been a game changer for my trading. Now, my strategy, I can use it blindly and just buy the same stock month over month and still make a profit. If you know my strategy already, but seasonality amplifies the strategy because now I'm focusing on stocks that historically do well for certain months. So it's a double layered effect to my strategy, and it makes me even more profitable. It makes the risk to reward even better. It makes the win rate higher. So I highly, highly suggest you guys research seasonality, consumer behavior, how money flows in and out of businesses, um, and try to translate that information and education into your trading decisions. So yeah, that's pretty much all I wanted to talk about here. This is kind of a more boring video, but this is kind of giving more explanation as to why I think seasonality is a great method to trading. It's a great approach to trading. Now, of course, you have to have a good strategy behind it. You have to have good risk management behind it, right? So there's other pillars to the strategy that you need to build up and understand so that in the long run, you can make great money in the markets. So that's pretty much it, guys. I hope you all enjoyed. Please leave a like on the video. That helps me immensely. Again, all the content I put out is completely free here on YouTube, and I have a Discord that is also free that you can all join. Trying to build a community of like-minded individuals. And also hit that subscribe button. I'm so close to hitting 1,000 subs. We're getting there. Hopefully I can get monetized on YouTube, but I don't know how much money I'll make on that. I don't really post consistently enough to really make substantial income. And again, like this YouTube stuff that I do, it's purely a hobby. The trading that I do, I make plenty of money already from it. So, but I do enjoy talking about finance and trading and whatnot. So yeah, I appreciate you guys taking the time to watch this video. And yeah, I hope you all have a great day, and I'll talk to you soon.